Hi guys, good morning and welcome to Trading Hour. I'm Pavitra Parekh. With me are Prashant as well as Sumera. And we have slipped significantly from the day's high right now. So right now the key indices are around, you have Nifty Futures around 90 points lower. And if you take a look from the highs, we've seen a cut of around 140 points right now. And the Nifty Bank as we speak, by the way, has moved back into the green, but we did see quite a dip come through there as well. If you take a look at some of the counters which are leading to this pressure on the Nifty Bank, those will come up on your screen. So the likes of Indices, Axis, Kotak, all seeing some cuts. But remember, this is after the Nifty Bank has seen a gain of over 5.5% for the month, right? So definitely no big move in that context. It is the auto stocks which are holding up quite well today as well. So those ones will be up on your screen. And it is the IT pack once again, which is leading the decline. So some of those stocks will come up. The likes of Infosys, Tech, Mahindra, HCL Tech, all of these which are some of the top losers. But Prashant, considering the kind of momentum that we've seen, this is not too bad.
I mean, yeah, it's not too bad at all. And by the way, from yesterday's morning, guys, from yesterday's low, we are still 150 points away.
Yeah.
So, you know, it's mild, minor. And I think the big move this week in global markets happened in the US on Tuesday with that, 5% sell-off. And the reaction yesterday by close was 0.4%. I mean, just contrast the two, right? And today we've got another 0.5%. So in total, the reaction to the 5% cut has been about a 1% cut. Although, I mean, yesterday the US market came back up about 1%. So it's not 5 but 4. But in any case, I mean, the point is that there is a huge amount of outperformance that the market is sitting on. While that is well and good when you're playing momentum, but that also opens the market up to, because the market has got so much gains, on the converse side, it's also a market which can give up some of those gains as well, which is what seems to be happening. But, you know, the impulse very clearly has been to try and, try and buy the dips, and it's usually worked out, right? More often than not. It worked yesterday, which was, of course, an absolutely incredible after Tuesday's Wall Street sell-off. So let's see, I mean, if some of that impulse comes into play today as well. Not very much new that you're going to learn looking at the screen today. It's some amount of consolidation, some amount of reversal, that kind of price action. Market breadth has kind of converged. When we started for the first 40-45 minutes, advances outpaced declines for something like 5:1, and now it's become 1:1. Broader markets, like yesterday, have converged once again. So, I mean, full session still in front of us, and it promises to be another interesting one. Samira, hi.
Hi, morning, guys. So let's get started. There's a lot that we have lined up for you. Indices have slipped after a positive start. Autos and energy are showing strength. Banks are taking a bit of a hit. Mid-caps are outperforming. We'll talk about the way forward for the market. Joining in will be Anil Sareen, CIO of Centrum PMS.
PVR slides on the back of a large trade. 55 lakh shares or 9% of equity exchanges hands at an average of 1892 apiece. More details coming up for you in just a bit.
It's a tepid D-Street debut for Tamilnadu Mercantile Bank. Shares list at 495 rupees apiece on the NSE. That's a 3% discount to the issue price. S. Krishnan, Managing Director of the company, will join in to talk about the listing and the business outlook. All of this and much more over the next 60 minutes.
All right, so that's what's lined up here on the program. Let's get to our first voice, and this is markets we are tracking. What else? Anil Sareen is Chief Investment Officer at Centrum PMS, and he's joining us to take some questions. Anil, great to have you with us here. Thank you very much for your time, as always. I don't know if you've spoken before, Anil, but I just wanted to first set up your thoughts on where we are as far as markets go before we dive into themes and sectors and what you like and not. We've had tremendous outperformance here in India, and the last 5-6% has come very, very quickly, almost in about 10 or 11 trading sessions. Your thoughts, Anil?
No, absolutely. I don't think I can add anything more to what you just said, Prashant. That, I mean, we've had quite a divergence. So now I think we should be consolidating, and I would not be surprised if the market gives up a little bit of the gains. It has been quite a bit in a compressed period of time.
Hi, Mr. Sareen. Good morning, and thanks a lot for joining us. So, in that case, when we have been talking so much about the global picture, about the Fed's upcoming meeting as well, do you think, irrespective of what happens globally, we are likely to continue along this path of momentum that we've been seeing?
I don't think so at all. I mean, we are part of the markets, part of the global markets. Yes, there's a very clear divergence that is happening. India is becoming more and more a consensus kind of a market, a buy market. But at the end of the day, there is this global situation which is deteriorating, and all markets are linked. So I'm not confident that we can continue to forward such a path in the face of deepening situation or a worsening situation globally.
Hi, Anil. Morning. I wanted to understand that, if there is this possibility of a pullback, would the preference still be for blue chips, large caps? What is the scope currently to have, mid or small caps in your portfolio?
So if you go back, over a longer period of time, what we have observed is that when things are tough for the economy, when there is a lot of pressure, market participants seek comfort in large caps, in safe kind of names. On the other hand, when there is optimism, when there is more of a buoyant economy, such as which we are seeing in India right now, at that point in time, people look for new names, people look for opportunities. So that favors, small and mid cap. So it's our belief that we are in that situation now, where small and mid cap should outperform the large caps.
Right. No, do you have a view on, from companies that you meet and your own observation about the local economy? Because you started that answer by saying that when, there is general pressure on the economy, etc. The feedback we've been getting from companies we've been speaking to across a range of sectors is that things are pretty good. Maybe at the entry level there is problem and maybe serious problems, but otherwise, premium category of products, things are looking very, very good. I'm talking about building materials. We're a paint company earlier on. We've spoken to real estate companies, consumer good companies, and so on and so forth. What is your own impression of the domestic economy and earnings acceleration consequently?
So we are on the rebound. I mean, fiscal 19 marked the multi-year bottom in terms of corporate profits percentage to GDP. From that time onwards, we have been only going up. Today, I think we are standing at around 4.6, 4.7%. Of course, it's still a very long way off. Right now, it's a similar situation. If you go to the US, there the market consolidation is of such an order that it is around 12% of GDP is the corporate profits over there. I don't think India in the medium term cannot go towards 12%, but we are around 4.6 odd, and there is scope for more, increase in corporate profits. So. To your point, yes, absolutely. There are many Indias, and to make a generalized statement is not correct. So there are people who are spending, you only need to look at the banking credit growth, or you look at the auto revival, and if you talk to the auto people, they'll tell you it is the higher end models which are doing better than the entry level models. So clearly. There is a demand impulse. There is a lot of growth ahead of us. So yes, India is doing well. The international environment obviously is not that great.
Okay, if you can just talk about a few of these sectors, and since you did mention the auto space as well, we've already seen quite a bit of a run-up in these stocks. Do you think that at these levels, they still look attractive to get into? And within the autos, what do you like? Which way would you play? Do you look at the two-wheelers? Do you look at, the standard CV players?
So, yeah, I mean, the whole auto complex, if you see, the ancillaries, the OEs, everything has risen. The market obviously discounts ahead of time the rising earnings that is expected. As far as we are concerned, yeah, we are more constructive on CVs. You can play directly, but that's not such an easy way to do it. You can play it indirectly through the ancillaries that supply to the CVs. These cycles tend to be long for CVs, so we are entering a kind of a period for the next few years. CVs should continue to do well. Within two-wheelers, again, there is certain two-wheelers which have a unique differentiation. Those should continue to do well. Maybe we have bitten off quite a bit right now, so there could be consolidation. But otherwise, for the next few years, the auto sectors, especially the commercial vehicles and select two-wheelers, should do well.
Okay. Anil, times like this, when they say, when there's a lot of upheaval going on in the environment around you, maybe even globally, it also gives rise to great opportunities, right? So are there any tactical calls that you're looking at, or, any sort of contra bets?
Look, I mean, investing is always about, anticipating where the market is going to move, rather than looking at what has already happened. So clearly, we also in our portfolios, we will look for well-known names, those that are performing today, but also lesser-known names, or those companies, those opportunities which probably could be coming into prominence in times to come. So that's how you create a portfolio that outperforms. And at any given time, I mean, there would be corporate actions happening, some mergers, demergers would be happening, or there could be some sectors that would be coming into the limelight. Like nowadays, healthcare or hospitals are becoming more, appreciated by the market. There are two sectors like defense and mining, which they haven't had such a big impact on corporate earnings in the past. But those sectors going forward should become a larger and larger component. And in fact, if I were to make a broader point, there is this coordinated kind of a revival in Indian economy. Many of the old sectors which weren't doing well have now started doing well. And on top of that, you have to overlay mining and defense. So as such, we are pretty bullish that over a period of time, corporate profitability should surpass what it has done in the past.
By the way, the market is down 120, so which basically means that from yesterday's low, which is 17,770, we are about 100 points away. So let's see. I mean, does this get a little bigger, or it stops here? Futures, the Nifty Futures is also turned into a discount. It's blinking red and green, absolutely flat. 17,885 on futures, 17,883 on the spot. So just 2 or 3 points, but that's slipping in and out of the discount as well. Anil, you like logistics as a space, right? What exactly? What subsegment? Is it the express parcel? Is it a sort of company like All Cargo? We have the management with us, which is also into sort of global shipping, etc. Or very local focused express shipping, more dependent on sort of e-commerce, etc.
Yeah, so we are clearly on the local side. Internationally, there are a lot of moving parts, and so that's harder to sort of project. But domestically, I mean, at a broader level, as consumers, we have enjoyed the benefits of express delivery, on time, traceable, trackable, etc., etc. Now the corporates want the same, and there are very few players. It's a very concentrated. It's a very, very small set of companies, and they are beneficiaries of all the investment that have gone into roads and railways, etc., etc. So they have the brand, they have the distribution, they have the IT system, very, very importantly. So, as more and more people move from unorganized on the corporate side, these players are poised to do quite well. So you will be, I mean, we have been surprised, and we feel that going forward as well, there will be more surprises in store as to how high the operating margins can go through this phenomenon of operating leverage. You've already made the investment. As more and more people adopt your solutions, incremental expenditure being lesser, you can see rising profitability, even from the current high levels. But focus is on domestic.
So, Delivery, Blue Dart, TCI Express, Gati, these kind of names?
Yeah, I mean the whole sector should be doing well. Yes.
Okay, and tomorrow we have the National Logistics Policy, which is going to be unveiled as well. So I don't know what that can do. Provide a roadmap, bring all of the moving different parts together. So let's see. That's going to be interesting to watch as well. Anil, it's a pleasure. Thank you very much for joining us. Great speaking with you here on the program. The market's down 135 points, and we're at about, 17,866 at this point in time. Let me just take a quick look at sectors where there is this pressure, which is more and more evident. And then we'll take a quick break. So we have the real estate index, which is down 1.5%. It's losing the most. It's followed by pharma, which is down 1.5%. That's real estate. And then pharma will come up 1.5% lower. IT is down 1.5%. IT, even though the market did so well yesterday, it was down 3% by close. It's down another 1.5%, so no luck there. And you got the healthcare index, which is down 1.5% as well. So it's pretty broad-based, actually. Easier to count what's up, and that's on only auto and energy. At least two large indices which are higher by about 0.75%. Actually, auto is the only one which is meaningfully higher by about 0.75%. Others are more like flat, energy, etc. But more down than up, most definitely. And I think the breadth of the market is also now negative. Yeah, 1,200 stocks are lower and about 800 stocks are higher at this point in time. We'll take a quick break. First in this program, we'll come back and we discuss commodities in focus. Oil's made a move higher. Manisha is going to be joining us to talk about that and more. Stay with us.
Hi, welcome back. You're watching Trading Hour. It's time now to take check on what's happening in the commodity space. Manisha is here, and today she's talking about sugar. Hi, Manisha. Morning.
Morning, Sumera. Thank you for that. Well, yes, the new sugar season starts from 1st of October 2022, and the markets are anticipating that the sugar export quota could be allotted or announced any day now. There have been conversations already about it. While the street or the industry is expecting an 8 million tons of an export to be allowed, we do understand that 5 million tons is what could be allowed in the first tranche itself. Last year, remember, the exports were at a record highs, and this time around at 8 million tons. It's lower than 105 or 110 million tons that we have, 110 lakh tons rather, that we have done in the previous year there. When you look at the breakup of the numbers this time around, the carry forward stocks from the previous season have also seen a decline. So we're looking at around 6 million tons this time around. If you look at the Indian sugar consumption as well, that is expected to be near record highs of around 27.5 million tons. The markets are anticipating that for 2022-23, the mills will divert something like 4.5 million tons for ethanol production as well. These are important numbers on your screens right now. This is the opening stock for sugar that the industry has seen, which has continued to decline. So that means that the industry is looking at lesser and lesser surplus availability into the Indian markets. So this year, we're just looking at 6 million tons of an opening stock for the new season. When you look at the export numbers, as I was saying, 112 lakh tons of export is what India has done in the last year, which has been an all-time high. So when you look at that trajectory, it has constantly gone up there. This year at 80 lakh tons or 8 million tons, we are looking at a slight decline here. That's also because you're looking at slightly higher consumption. Exports are going to be stronger as well, and the markets are looking at an opening stock, which also is quite comfortable. So we are getting at a level where you're looking at a balance in sense of demand and supply in case of sugar, and that in turn could be supportive for prices as well going forward.
All right, Manisha, thanks a lot for getting us all of the details on the sugar move. By the way, a lot of these stocks are moving around in trades. So something like a Balrampur Chini is doing well. It's up 1.5%. Sri Renuka is up 2.5%. So a lot of these stocks moving around quite well. But with that, we're going to get into a short break. When we return, we'll discuss the market technicals. Jay Thakkar of Marwari Shares will also be with us. Hey guys, welcome back. You're still tuned into Trading Hour. For the markets, we're seeing around a 90-point cut right now. The mid-cap index has moved back into the green, so a little bit of a pickup over there. But the Nifty Bank also is still in the red, and that is moved around 120 points lower as well. So let's get a technical check going on this market. Jay Thakkar of Marwari Shares and Finance joins us for exactly that. Jay, good morning and thanks a lot for joining us. So right now, I mean, we've seen quite a dip, from the levels that we hit soon after opening. How are you looking at this right now? And also take us through your call on the Nifty Bank. I mean, we saw a sharp recovery yesterday.
Hi, very good morning to you,
at it?
Pavitra, and everyone. Yeah, sure. Hi, very good morning to you, Pavitra, and everyone. As far as the index is concerned, I would say that yes, Nifty is struggling, to close above or maybe sustain above the levels of 18,000. I mean, that's the level wherein we have seen that market goes up above those levels and thereafter reverses back as well. But then on the flip side, we also see that in 17,700, 750, the recent lows in the panic bottom which we saw. Now that will act as a very crucial support out there. So overall Nifty range would be 17,750 to maybe 18,050 to 18,100. But the Bank Nifty momentum is absolutely positive. I would say it has hit the all-time highs, and the overall trend out there is still bullish. I would say that 41,000 on the immediate basis, and thereafter 40,500. Now these are the two important levels for Bank Nifty. And on the upside, I believe that it has in fact made the high of 41,840, but then it's likely to inch above the levels of 42,000 as well going forward, wherein we are seeing highest amount of call writing happening so far in this series. So once 42,000 levels are taken off, it would inch towards 43,000 as well, and that would eventually help Nifty also to break above this range of 17,750 to 18,050 to 18,100. Now overall, stock specifically, if you see that Maruti has again come back in today's trading session. I mean, it has really provided a breakout above those 9100 to 9200 levels, and that was acting as a very crucial resistance in several past occasions now. But now the momentum has also come back into the buying mode. So Maruti is now likely to inch towards the levels of 9,500 on the immediate basis. One can buy this, placing a stop loss below 9150. The first target would be 9,500. And above those levels, definitely is inching towards this all-time high levels as well. So Maruti is absolutely bullish. And second buy recommendation which I have got is on HDFC Limited. We have seen HDFC Bank performing since past two trading sessions, but then HDFC Limited too has been consolidating within this range of say 2,400 to maybe on the upside 2,475. Now this range is likely to provide a breakout on the upside, and thereafter we can see the levels of 2,550. So one can buy HDFC Limited targeting 2,550, and one can place a stop loss below 2,400.
Okay, Jay, thanks much for joining in. We're going to take a quick break. I beg your pardon. As we do that, here's a quick reminder for our viewers. It's that time of the year again. Money Control Pro's Financial Freedom offer is back and with added benefits. So get a Money Control Pro subscription at net zero cost by claiming exciting offers worth 1,500 rupees from our partner brands. Grab the benefits now only on the Money Control app or website. Hi, welcome back. Let's focus on the metal sector now. Aluminum giant Alcoa has warned of cost pressures and lower prices, while weak guidance from steelmaker Nucor has sent U.S. steel stocks tumbling. Nigel tells us what kind of impact this is going to have closer to home. Hi, Nigel.
Well, that's right. Overnight you had a couple of negative news coming in, both from Alcoa as well as from Nucor. Let's start off with Alcoa first. They sounded circumspect on the aluminium demand in a conference that was held by Morgan Stanley out there. That's the presentation that they made out there, and that's where the stock was down close to around 10%. U.S. steel stocks as well overnight, they got a hard knock because Nucor, they updated their EPS guidance and they, downgraded it by close to around $1.50 odd. The reason that they state is that volume is likely to get hit and margins are likely to get compressed. So on the back of that, the steel stocks out there as well got hit. Edelweiss, they comment on the implications for Indian companies out here. They say that the domestic stocks, well, they're not really correlated to the U.S. steel stocks, but they believe that earnings will be under pressure for the coming quarter, that's quarter 2 FY23, and also they remain circumspect on the sector's prospects in the near term. So put this together and could explain why the metal index itself is under some pressure, may not be a direct correlation, but Edelweiss says that maybe there is some need to be a little bit cautious. Back to you guys.
All right, Nigel, thanks a lot for taking us through all of the details there. Another stock that we're tracking today is PVR. It's down almost 5%, and this is on the back of a large block deal. Nimesh is here with the details on that one. Nimesh.
So there is a confirmation that 7.7% equity has changed hands in a block deal. So clutch of private equity investors sold 7.5% stake, which is around 47 lakh shares at an average price of 1891, a close to 2.5% discount to yesterday's closing price. Now, in terms of buyers, the feedback from the bankers is 80% of the book was built by long only funds, 20% by hedge funds, and within the 80% of long only funds, there was a 50% participation from domestic mutual funds. And I believe one of the domestic mutual fund was an anchor investor as well. So the book was well built by long only funds. But the fact that 7% equity, 7.5% equity got sold at a discount, and that's why there is a bit of pressure on that particular stock. Remember, the institutional holding is quite high in PVR, close to 83%. So it's largely a shift from private equity investors to clutch of domestic and FIIs. But the fact that Ps have started selling, there is a bit of pressure in today's trade, and also the fact that there is a bit of discount as well in the block. So. But overall feedback is well bid by long only funds as well as some domestic mutual funds as well.
All right, Nimesh, thanks a lot for bringing us all of those details on PVR. 7% equity changing hands, and the stock is down around 4.5%. The next one we're tracking is Maruti. This one is doing well in trade after BofA Securities raises its target price on the stock. Sonia standing by with more from the report. Sonia.
Well, Maruti has hit a fresh 52-week high today. In fact, that stock has been on a tear. It's up 24% in 2022 already. Brokerages are very bullish on Maruti. BofA Securities, or Bank of America Securities, has come out with a bullish report this morning where they have raised their target price on Maruti to 10,500 versus 9,500 earlier. They say that Maruti has made a big comeback, especially with a slew of their new launches, and those launches look very promising. A good response to the new Brezza, despite the premium pricing, is very encouraging, and hence BofA Securities has raised their earnings estimates on Maruti. They say that Maruti is now plugging the gap that it had in the mid and premium SUV segment. They expect a volume growth of 14% compounded over FY22 to 25, and they're also revising their revenue targets upward by about 6 to 8% and their EPS estimates by about 9 to 10%. So Maruti as a stock has given you positive monthly returns for 6 straight months in a row. Definitely bullish momentum over here. Back to you.
Sonia, thanks for that. A very quick break. It's been a tepid listing for Tamilnadu Mercantile Bank. So we'll speak with the management when we return. Do stay tuned in.
Welcome back. You're still tuned into Trading Hour. For the market, we're currently seeing around a 60-point cuts. We have moved up a little bit right now. It is the Nifty Bank where you're seeing quite a recovery once again. So it's just around 20 points lower right now on the Nifty Bank. The likes of ICICI, you have Axis, Kotak, which have all moved up a little bit right now. But Tamilnadu Mercantile Bank is one which is in focus right now. It's seen quite a subdued listing on the exchanges. The lender's shares listed at around a 3% discount to the offer price. Abhishek is here with more on that. Abhishek.
Well, a quick Swot analysis on Tamilnadu Mercantile Bank. The strength is that they are adequately capitalized and they have healthy return ratios due to higher names. However, on the flip side, or the weakness is that there are outstanding legal issues to around 38% of the equity. The stressed assets are more than 45% of the loans, with 3.24% of the loans under SURFACE. Debt recovery has been initiated for close to 10.8% of the loans, and 30.7% of the loans are under moratorium. Gross NPA ratio is at 1.7%. Many instances are there of whistleblower complaints which can work against the company, and some of the corporate accounts are untraceable. There are no opportunities that I could find for the bank. However, the threats are that there is employee union, and we have seen regional concentrated banks having an issue with employee unions. And talking about regional concentration, 75% of the loans are in the state of Tamil Nadu. Gross NPA has only improved ahead of IPO, and there are issues in ownerships as well. Back to you.
Okay, I mean, so a lot of issues as far as shareholding, etc. is concerned. But now it's part of the public market. So let's speak with Mr. S. Krishnan, Managing Director at Tamilnadu Mercantile Bank, who's joining us to take some questions. Mr. Krishnan, great to have you with us here. Thank you very much for your time. Prashant this side, and congratulations, first of all, from all of us on the listing.
Thank you.
Right.
Thank you very much. Thanks a lot.
So we understand you've just taken over as MD recently?
Yes, Mr. Prashant, I will just give you a brief. I took over as the MD and CEO of the bank on technically on the 4th of this month, and the 5th the IPO was opened. Right. To give you a brief, I was earlier the Managing Director and CEO of the Punjab Bank, and was the executive director of Canara and Syndicate, having about 4 decades of the experience in the banking industry. Having said that, this Tamilnadu Mercantile Bank is basically a financially sound and strong
Mr. Krishnan,
private
sorry.
sector bank with 100 years of
Yeah. No, that's absolutely fine. What?
With 100.
Yeah.
Yes.
No,
Yes.
Yeah. No, I just wanted to understand.
Yeah. You can go ahead.
Yeah. No, some of the issues which my colleague, I don't know if you heard, Abhishek also highlighted, right? A lot of the shareholding is under dispute. Could you provide us with some perspective? What is the shareholding like right now, and what is the dispute, and what implications, if any, does that have on the business and how it's run?
No, I can tell that these issues are not of the latest one. These are pending in the different courts of law. They are sub judice, which has been very well said in the DRHP. But having said that, it has never affected the business of the bank. The business of the bank was going as usual, and it has never affected. This has to be resolved in these are pending, as I said, in the different courts of law. That has to be, but that has nothing with the business of the bank.
No,
the
Mr.
business of the bank is going ahead,
40%,
and it will be going ahead.
No, it's some 37% of the shareholding has got some legal issues, right? So when the ownership itself is being disputed and there are issues, wouldn't that affect which direction the bank should take, how it should be run? It's very real,
it
isn't
will not
it?
be, because see, I will just tell you that there is no individual person who has can be claimed as a promoter.
Yes.
That is what, based on the shareholding, we have said that there is no specific promoter as of now, and this is a professionally managed company. So whatever be the disputes, this is subject to the courts, and I do not foresee anything which will have adverse on the functioning of the bank.
Okay, you're saying, what about loans themselves? I mean, there is a lot of the loans are seeing stress, right? I mean, the shareholding is one thing, but
no, I will give you a clarification, or I will just explain that I was hearing the observation of the analysts that there are large number of stressed book. But if you look into what is my slippages and what is really going, what is my credit cost, they are very, very less. In fact, I can say with proud that this bank slippages are very less, and it is not that the gross NPA has come down just before the IPO. If you look into the gross NPA, it has been consistently coming down, and it is now at 1.69 as on March 22, and the net NPA at 0.95. So this is not just net NPA. Consistently over the period has come down. The bank has been focusing. There was also observation on the corporate books. Let me tell that out of the total loan book, 88% of my loan book is of the RAM, and only about 12% are of the corporate. The RAM is one where I have a strong foothold.
Some 40,
my recovery
some 40%
is good.
of the
My
book
underwriting
is
standards.
Right, Mr. Krishnan, some 40% of the book is under moratorium.
No, it will not be. Of course, right now I do not have the numbers. I can come back to you with the exact numbers of the percentage of the moratorium. What I am telling is, if I look into my recovery history, my recovery history shows that it is they are not slipping. The moratorium might have been given during the COVID time, as per the eligibility might have been given. But if I look into my recovery, the recovery is good. It never slips. So nothing to worry. I will be coming back again maybe after the quarter results. I will be coming back to the street, and wherein I will be able to give you a better picture on the numbers. As I said, I just took charge a week back. Nevertheless, I have gone through the papers that the recovery is good. There is no slippage, nothing to worry.
Good morning, Mr. Krishnan, and thanks for joining us. This is Pavitra. You know, on the gross NPAs, I think what my colleague was referring
good morning, Pavitra.
Yes, was that, you know, during FY20, FY21, we saw around 1,000 crores. And then in FY22, ahead of the IPO, you did see, you know, it dropped to almost half of that amount. So that is what we're referring to on the asset quality. But also in your...
Okay.
Yes, on your RHP as well, you're mentioning that there are some corporate accounts which are untraceable. Can you tell us, A, what is the quantum of these, and do you have any clarity since that level? Do you know how many of these accounts are still untraceable?
See, right now I will not be able to give the data because I will come back to you with a quantum of how many of the corporates are untraceable. But I only look into the overall my loan book and what is my today the NPA and how much, see, as an investor, as a stakeholder, will it have any impact? So going forward, if I look into that today, my provision coverage ratio is around 88%. That is one of the best in the industry. Keeping that in mind, and also that only 12% of my loan book is of the corporate, so I don't foresee anything. Rather, I foresee positively to the investors where I will be having a good write back of the provisions.
You know, Mr. Krishnan, usually the person running a company, when the company IPO, stays on, right? There's continuity, and you're a public company now. Is this not a little peculiar?
Yes.
This change in management? Right in the middle of the, not even the middle.
No, it is not peculiar. It is not peculiar. See, I will just give you a brief background of this. The bank has been taking efforts for listing over the period, and my predecessor term was already decided. It was expiring on 3rd of September, and I will be staying. Now the RBI has given the approval for a 3-year term for me. And there will be a continuity, and if you look into that, my predecessor still even today is available with me here, so that there will be a good transition. Of course, I took charge on 4th, there was no break. This was a coincidence, nothing else.
Coincidence, nothing else. Got that. We'll leave it there for now, Mr. Krishnan, and I guess we can speak a little later once you are once you've gone through all the numbers.
Absolutely. It will be my pleasure to again speak with you.
Yeah,
yes.
Absolutely. And I think we can have a more number-focused discussion the next time you were on. Thank you very much once again. Maybe around the time of the quarterly earnings release.
Yes. Thank you. Thanks a lot.
Regular occurrence. Thank you. Well, that's Tamilnadu Mercantile Bank with some idea, some sort of perspective. That's a new managing director of the bank who's just taken charge. I mean, a few days old at the bank. Talking to us about what he sees as the business. Pretty positive. Provision coverage ratio, etc., is high. The legal implications of all the dispute with regards to shareholding should not have an impact on the business per se, etc. Tamilnadu focused, of course, is how the book is, but that is expected to change as well. The market has recovered sharply. I mean, we're up about 40 points from the day's low. So we're down 80. We were down about 120, 130 odd points. So this is happening here. 17,922 is where the index is at right now. Over the last 10-15 minute odd bounce is what this is. We'll take a quick commercial break here. We'll come back more on markets when we return on the other side.
Hey, welcome back to Trading Hour. Let's get into important voices from the corporate world. My colleague Shilpa Ranipeta spoke with Angshu Malik, CEO of Adani Wilmar, and discussed trends in edible oil consumption as well as the festive season demand.
The edible oil prices over the last 1 year has come off sharply, particularly in the last 3-4 months. We all companies have passed on all the prices to the consumers. With this lower prices, the consumption is bound to improve because at a lower level consumption at the economically lower sections, they tend to consume on rupee basis and not on quantity basis. So they buy at 100 rupees, they would buy oil, whatever oil they get. So now they will get a higher quantity, and hence the consumption is bound to increase at least the lower strata of the population. Right. At the upper end, consumers will upgrade on the brands. We expect middle income families to get back into their old brands, which were their preferred choices. And consumption here also is likely to increase. But at the lower end, it will increase more.
Right. And what are your festive season demand growth expectations also this time? It's sort of the first near normal year that we're seeing. Any rough numbers also that you can give us with respect to growth that you're expecting during the festive season?
See, the first half has not been good because of the peak summer.
Correct.
And then the high prices. But over August onwards, as the prices have come down, that has gone into the consumer's hand. So consumers are expected to increase the purchase. But this year the festivals are earlier than last year. September and October will be a big month where both Dussehra and Diwali will be celebrated. Next, up to Christmas, we see a great boom in edible oil consumption. At these prices, consumers are very comfortable and they're very happy. It will bring all-round reduction in prices of all other food products because edible oil is a major part in the cost part of it. So we see this year the festivals will be very good.
All right, that is the management of Adani Wilmar saying that they are, expecting a huge boom in demand ahead of the festive season, and that is looking good, quite good as well. So with that, we're completely out of time, but a quick look at the markets right now. It is a 100-point cut that we are seeing on the Nifty. The Nifty Bank is around 175 points lower. It's a 0.4% cut there, but the mid-cap index is holding up in the green for now. And if you take a look at the stocks, it is really the auto pack which is once again leading the gains, and it is IT on the downside. But with that, we're completely out of time on this edition of Trading Hour. Thank you for tuning in. Halftime Report is up next.